York, I'm Vonnie Quinn. This is Bloomberg Markets. It's time now for Futures in Focus. Joining me to discuss moves in crude oil is Phil Streible of Blue Line Futures. Phil, just a brief word on inventories, because we did get the drawdown that I think a lot of the market was secretly hoping for. Is that a sign now that those storage capacity issues might be winding down?
I don't think so at all. I mean, you could see how short-lived the rally was after the inventory data came out. Market had shot up. We've already retested the low coming back into that inventory report. The problem is the supply-demand structure on oil right now is not supportive to higher prices at all. The drillers and pumpers, they're facing a string of losses and bankruptcies, and that's going to reduce supply going 3 to 6 months out. And if you look at the curve, that June contract trading $25, $26, I think it's going to continue to weaken here, but it's going to drag down the December contract. We can already see December is trading right around $30 at the moment, and that market is really weighing in. The big problem is, even if you drew down some of that inventory, there's still 160 million barrels of oil floating around the globe looking for a home. So there's just still too much supply, and the demand remains in question. If you go to all the way out to Ds 21, Ds 22, Ds 23, they're trading between $35 and $40. So it just doesn't see any pickup in demand in the near term.
Yeah, and then we had OPEC downgrading its demand outlook by another 3 million barrels a day, even as Saudi Arabia and Russia say that they actually see a little green shoot in demand around the world. What's the real story, Phil? Is it just that we don't know because of coronavirus?
Look, you're going to need to see a pickup in, a lot of different areas. Okay, small green shoots, that would be like if the shelter in places are lifted. 50% of oil's demand is road demand, transportation, people driving around. So that'll be the first thing to come back. If you go to aviation and people start flying again, that's about 7.8%. You go to cruise ships and things like that, that's another, 10%, those other industries out there. So it's an industry case on how oil comes back on the demand structure.
Phil, a brief word about Treasuries. We've seen this range for the longest time, even as we continue to get dire economic data. Producer prices as well this morning showing deflation, or disinflation, I should say. The 10-year at 65 basis points, is it about right?
I believe that interest rates have the strong possibility of going negative. Look, no one said crude oil prices were going to go negative. They're saying that Treasuries, it's not a concern at all. I believe that Treasury prices, if things get worse, you're going to see that negative interest rate, and that's where I think gold, silver, those start to benefit.
All right, Phil.